How's it going, everybody? Welcome faces back to another Satoshi Club video, where today I am going to explain the whole process of central bank digital currencies for you. And more importantly, I'm going to talk about why they are actually connected with all of these banks that are seemingly, collapsing these years because of this, financial situation that we've got ourselves into due to, a severe period of inflation and, the subsequent increase of rate hikes by the Fed and other central banks, and basically just trying to, make that economic balance between, inflation and unemployment. So if you enjoyed the video, subscribe to the channel, and let's get into it with a little recap of CBDCs and why they're actually important and what they could be in the future, right? So CBDCs, if they want to be truly transformative, they really need to bring the benefits of cash to more efficient digital rails. And this means that only in that case they could represent the public sector's response to this decreasing demand for physical cash. And what does this actually mean? It means that whoever has banks, debit card, credit card access, digital wallet access, this is not actually cash, right? This is all a liability, right? They're liabilities of their private sector issuers, and cash itself is a liability of the central bank. And if a CBDC actually comes to life and becomes nice and well thought out and well put together, it would actually make digital cash available to the public itself, which is a huge step forward, right? And the answer, whether or not a digital dollar is actually necessary, depends and lies in the answer to how the CBDC is actually distributed, to whom it's made available, and whether it should carry an interest rate. So a CBDC itself, if distributed through the Federal Reserve members, would kind of create a problem, right? Why would it create a problem? Well, it's because a CBDC would actually be the safest asset available. So then people would choose a CBDC rather than investing into a bank, and it would create this sort of situation where we have a conflict of interest, right? The Fed does want banks to be used, but they also want the CBDCs to be used. So it's going to create a big conflict, and consumers might actually prefer or rationally choose a CBDC over bank deposits. So even a well-designed CBDC that addresses all of these risks has the potential to be disruptive for providers that rely on high fees, such as banks, such as payment providers, but also it goes with the whole blockchain disrupting technologies thing that we have going on in today's world. So blockchain, AI, all of these things are going to disrupt technologies, which is why here at the Satoshi Club we're focused at the newest and most innovative technologies that come on board. So once again, subscribe to the channel if you're enjoying it. And just to conclude this little introduction about CBDCs, it will likely take years for a CBDC to actually be developed and adopted. So I guess we just gotta wait on the side and see. And one last thing is that CBDCs and stablecoins are actually strong complements, not substitutes, because this will allow both the public sector and the private sector to operate with digital cash or central bank digital currencies. Now, let's take a little look at what's actually happening with all these bank collapses, right? Banks are collapsing at an alarming rate. And for example, this SVB, right, which held $3.3 billion of Circle's funds, managed to depeg Circle for a little bit, right, to a low of $0.869 per Circle coin, which basically means that Circle lost its peg. It's a terrible thing. That's the same thing that happened to UST, Terra Luna's stablecoin that we've talked about in the past. You can check one of those videos out, in the on the side or whatever. But in general, a lot of depegging happened due to this SVB collapse, except for one stablecoin. Now, if you know which stablecoin that is, drop it in the comments down below, but I will tell it to you in a little bit in this video. But basically, this was a wake-up call for stablecoins, and it does show us the importance of having a strong stablecoin out there. And one of the reasons, or one of the ways to actually have a strong stablecoin, is for them to be transparent and regulated. So the depegging of USDC, and I will talk about which safest stablecoin we have at this moment, how USDC actually came back in just a little bit. But stablecoins actually rely on banks to hold their reserves, and if banks fail, the stability of stablecoins are at risk. Now, the question is, which stablecoin has diversified well enough into the best possible banks and other assets to actually have the lowest possible chance of defaulting or of losing this peg to the dollar? Circle, it held its course okay, you know, decently, but one of them was better, which, you know, I'm going to tell you in a little bit, so I guess you gotta wait and see. But regulation is a very important thing as well. So we need regulation for the entire stablecoin market if we don't want a lot of people to lose out on their money. And one of the best ways to regulate is, first of all, strengthen oversight, right? Stablecoins actually operate in a gray zone right now when it comes to regulations, and it's different in a lot of different countries out there. But in general, if we make a better oversight of the stablecoin industry, we will be able to regulate them better and you know, stop this depegging from actually happening and creating larger market crashes. And you know, it's just a whole process of things that happens after a stablecoin depegs. Banking infrastructure can be improved as well, and this includes, you know, potential CBDCs in the future, developing contingency plans. So what happens once a stablecoin fails, right? Is somebody going to bail them out? Or how is the stablecoin issuer actually going to deal with what is going on once they actually depeg? So Circle, for example, dealt with it very well in this last period of past few weeks. And obviously education is a very important part, and transparency from the issuers of the stablecoin itself. Now, moving on into CoinDesk, right? Tether actually was, to answer the question from before, the most stable and safe stablecoin out there, right? And it emerged as the best bet for traders in the past days, in the past weeks, because USDC fell under 90 cents on March 11th, but Circle actually managed to come back, right? They came back to the peg because they had a smart way of dealing with things, but USDT never depegged in the start. So who's the boss? USDT is. Now, data shows that at least 5 billion of inflows into USDT happened in the past few weeks, which is tremendous, right? It's bringing the market capitalization of USDT to around $77 billion as of Wednesday. Part of this could likely be due to its supposedly low exposure to the US banking system, and also, you know, because its popularity lies in the Asian region. So USDT being exposed to both American banks and low exposure to American banks, low exposure to Chinese banks, and basically just a very diversified portfolio of things that back up the USDT stablecoin, it makes it a very strong one and very unlikely to fail, which is you know, a really good thing, right? And a lot of USDC, a lot of DAI, a lot of these other stablecoins were traded into USDT in the past few days, which kept USDT liquid and unable to you know, depeg at any point of time. Now, Tether's thesis of holding a variety of assets to back its stablecoins is quite important, right? Which is, you know, just don't put all of your eggs in one basket, or don't put all of your money, or $3.3 billion like Circle did, into SVB, right? You know, what happened was this depeg happened. It was very dangerous, but you know, there is always need for caution. Even though USDC did depeg, they demonstrated effectiveness and resilience of its hedging strategy through collaboration with its banking partners to recover the peg swiftly as possible. And you know, we should always be careful, because even in Tether's history, or USDT, it has experienced FUD, but you know, due to this resilience that was shown right now, it may have a chance of long-term success, and the demand for stablecoins stays undented. So there's still huge demand. Now, there always is duration risk, which is one thing that is used in the bond market mostly, but this may be something I'm going to talk about in a later video. In general, we have Bitcoin laying around the 27K mark right now. We have a huge zone of resistance around the 30K level. So if we do reach that point right here, we could expect a retracement further down to see where the market is going to go next. So that's it for this video. I hope you guys all enjoyed it. Make sure to drop a like, subscribe to the channel, comment down below with your favorite thoughts and opinions, and lastly, I'm not a financial advisor, and you should do your own due diligence before investing into anything in the blockchain, crypto, or you know, NFT, metaverse world, or whatever. So thanks for watching. I'll see you all in the next one.